Early investors in SpaceX made 38 times their money before you saw a single share. Now the IPO opens to retail. 30% of the allocation goes to the public. Every headline called that generous. But here is what those headlines did not ask. In any deal where early investors are sitting on 38 times their money, who exactly is the exit? I have a master's in aerospace engineering, and when SpaceX filed that IPO on April 1st, 2026, my entire network lit up with one question: should I buy in? So I went and looked, and what I found is what this video is about. Let's start with the most basic question. What are you actually buying? At $1.75 trillion, SpaceX is not one business. It is four very different businesses wrapped into one filing. Two of them have real verifiable numbers. Two of them do not. The first business is Starlink, SpaceX's satellite internet service. As of February 2026, Starlink has 10 million subscribers. 1 year earlier, it had 4.6 million. They doubled in 12 months. Revenue in 2025, $10.4 billion. $10.4 billion. That is roughly what Singapore's government spends on education in 2 full years, from one satellite internet service. Now, here is the number that shocked me: the profit margin. Starlink's EBITDA margin in 2025 was 54%. EBITDA is a measure of how much profit a company keeps before accounting for taxes, debt, and certain other costs. Think of it as the operating profit. A 54% margin is not a hardware number. That is a software number. Netflix runs at about 22%. Starlink is running at more than double that, in a business that involves launching rockets. Independent analysis values Starlink at roughly $600 billion on its own. Look at that margin, 54%, in a business that involves launching rockets into orbit. The second business is one you have actually seen working for years: Falcon 9 and Falcon Heavy commercial launches. SpaceX puts satellites, cargo, and astronauts into orbit for paying customers. NASA, commercial satellite operators, private companies. Launch services brought in approximately $4.4 billion in revenue in 2025. This is the only part of SpaceX that has been generating commercial revenue for over a decade. Real customers, real flights, real money. Independent analysts value this part of the business at approximately $100 billion. Two verified businesses. One question: why does SpaceX need to raise $75 billion if Starlink and Falcon 9 are already printing money? Hold that. The third business inside SpaceX is xAI, Elon Musk's artificial intelligence company. Grok, the chatbot. On February 2nd, 2026, SpaceX merged with xAI, the largest corporate merger in human history. Every xAI share converted into 0.1433 SpaceX shares. If you watch my terafab video, you already understand the shape of this. Link in the description. Here's what the numbers look like right now. At the time of the merger, xAI was bringing in $430 million every quarter. That sounds like a lot, but xAI was losing $1.46 billion every quarter. For every dollar it earned, it spent more than 3. That is a company that needs a massive amount of cash just to keep operating. That cash burn is now inside SpaceX's books. The IPO is partly how Musk plans to fund it. Independent analysts assign xAI a value of $258 billion inside this filing. The $258 billion is almost entirely based on the merger price, not on demonstrated earnings, not on a path to profitability. Are you following this so far? Because this matters a lot to what you are being asked to pay. The fourth business is Starship commercial launches. Starship is SpaceX's massive next-generation rocket, designed for deep space missions, point-to-point travel on Earth, and eventually Mars. Here's what you need to know. Starship is not in commercial operation yet. It has not generated a single dollar of commercial revenue. It is a concept, a very impressive, very promising concept. Analysts assign it at a value of approximately $170 billion in this filing. $170 billion for a business that does not commercially exist yet. Does that make sense? Now, let me show you what independent analysts actually think the whole thing is worth. Future Search, an independent research firm, broke SpaceX into 7 separate business segments and ran a median forecast for each one. At the median forecast for every single segment, the total fair value of SpaceX is approximately $1.25 trillion. PitchBook, a major financial data company used by institutional investors, puts the range between $1.1 trillion to $1.7 trillion. The IPO is asking for $1.75 trillion. To justify $1.75 trillion, every single segment of the business must perform at its 75th percentile simultaneously. Not just Starlink, not just Falcon 9, every single piece, all at once. The gap between what the analysts say is worth and what you are being asked to pay is exactly where early investors need someone to sell to. That someone is you. Look at the gap. Now, I want to show you that this pattern already played out 9 months ago. On July 31st, 2025, a company called Figma went public on the New York Stock Exchange, ticker FIG. Figma makes design software. IPO price $33 per share. Day 1 close $115.50, a 250% gain. The largest first day pop in at least 30 years for any US company raising more than $1 billion. The next day, August 1st, 2025, it hit $142.92. I'm so sure that many retail investors saw that number and thought, this thing is flying, better get in now. As of April 2026, Figma trades at approximately $20 per share, below the $33 IPO price. People who bought at $142 lost more than 85% of their money. What caused it? Lockup expiry. When a company goes public, early investors are legally prevented from selling their shares for a set period, usually 6 months. The day that window opens, they can sell, and they did. Insiders sold. Retail investors who bought at $142 became the exit. SpaceX is the same structure, at 40 times the scale. That fact is worth looking at carefully before you decide anything. Now, here is the number I cannot stop thinking about. Starlink's most important metric has never been published, not once. The metric is called ARPU, Average Revenue Per User. In plain language, how much does each customer actually pay every month? It is the single most important number for evaluating any subscription business. Starlink has never disclosed this number. Here's what that matters to your money. Right now, Starlink is growing fast in Southeast Asia, Africa, and Latin America. These are real subscribers, but customers in these regions pay substantially less than customers in North America. If ARPU is failing while the subscriber count is rising, doubling the number of users does not double the revenue. The math breaks. You are being asked to pay $1.75 trillion for a business whose single most important revenue number has never been made public. The S1, due in May 2026, is the first document where that number must appear. A company growing this fast would normally want you to see what each customer pays. It makes the story bigger, not smaller. The fact that number is missing is itself a signal. If this kind of breakdown is useful to you, hit the like button right now. It genuinely helps me to reach more people who need to see this before they make a decision. And subscribe if you have not already. I'm doing the full SpaceX S1 breakdown the day it drops in May. So now you know what you are being asked to buy. 2 verified businesses with real revenue, 1 cash-burning AI company, and 1 concept. But there is something I have not told you yet. Something that determines what price you will actually pay, even if you get an IPO allocation. It is the mechanism. And it is the most surprising thing I found in this entire research. Here is a fact I want you to look at. On March 30th, 2026, Nasdaq changed its rules 2 days before SpaceX IPO filing dropped. That is not a coincidence. Let me show you exactly what changed and why it matters to your money. 1. The thin float. SpaceX is only putting 5% of the company up for sale in this IPO. That 5% at $1.75 trillion equals $87.5 billion of tradable shares. $87.5 billion sounds enormous, but in the context of global financial markets, it is a very thin sliver of available supply. 93.5% of SpaceX stays private, controlled by Musk and existing shareholders. 2. 3 indices changed their rules. Now here is where I was genuinely surprised by how deep this goes. 3 of the world's biggest stock indices changed their rules right before this filing. A stock index is a list of companies. When you invest in an ETF like QQQ or SPY, the fund automatically buys every company on that list. It has no choice. Those are called passive funds. Here was the old Nasdaq rule. Any new company had to wait 3 months before joining the Nasdaq 100, and it needed at least 10% of its shares available to the public. SpaceX is only floating 5%. Under the old rules, SpaceX would have been completely disqualified. New Nasdaq rule, effective 1st of May 2026. If a company ranks in the top 40 by total market cap on its 7th trading day, it joins the index within 15 trading days. SpaceX at $1.75 trillion would rank in the top 5. The 10% float requirement removed. And there is a third change that I'm so surprised most people have missed. A new multiplier. For low float companies like SpaceX, their index weight is calculated at 3 times their actual tradable value. In practice, SpaceX has $87.5 billion in tradable shares, but passive funds must buy as if they are $262.5 billion worth, 3 times the actual amount. QQQ alone holds over $400 billion in assets. Every dollar in QQQ must buy SpaceX at that inflated weight, trillions of dollars forced to buy, into a stock with almost no supply. Does that make sense? Because what comes next is the key. This playbook already worked once before. In September 2023, ARM Holdings went public. ARM makes the chip design inside virtually every smartphone on Earth. Nasdaq offered ARM fast index inclusion to win its listing away from the New York Stock Exchange. Index funds had no choice but to buy. The stock jumped 25% on its first day. SpaceX is the same playbook, much larger scale. 3. Who knows and who does not? Here's the part that ties directly to your money. Hedge funds are not passive. They choose what to buy, and they can calculate the exact date passive funds must start buying SpaceX. They know the weight, they know the float, they know the exact buying window. They position before the wave, and they sell into it. The price you pay in the open market is not set by what SpaceX is worth. It is set by trillions of dollars being forced to buy a stock with almost no available shares. Nasdaq changed its rules 2 days before the following drop. Hedge funds already know the timetable. The question is where you are when the wave breaks. So now you know what is being sold, and you know how the buying pressure works. The last question for your money: can you actually get in at the IPO price? And if you can, what does it actually give you? SpaceX announced that 30% of the IPO shares will go to retail investors. Every headline called it generous. I want to show you what that actually means. 5% total float equals $87.5 billion. 30% of that is approximately $26 billion set aside for retail. But here's who in the queue ahead of you. In Wall Street terms, retail does not just mean everyday investors like you and me. Retail includes family offices. A family office is a private company that manages the wealth of a very rich family. They might manage $200 million, $500 million, more. They are classified as retail. They go first. Bank of America handles US high net worth clients and family offices first. UBS handles international high net worth clients and family offices first. Only Morgan Stanley's electronic desk handles small individual retail investors like most of us. Now, here is something I want you to know. The original retail allocation was 20%, not 30%. It was raised to 30% because the fundraising target went from $50 billion to $75 billion. They needed more buyers. Generosity was not the reason. The deal is expected to be oversubscribed by 10 to 20 times. That means for every dollar of shares available, there are $10 to $20 trying to buy them. If you apply for $100,000 worth at the IPO price, you will likely receive $5,000 to $10,000 worth. Now think about what happens next, step by step. The people who got the IPO price can sell into the passive buying wave in the first weeks. They bought cheap, they sell higher, they exit with a profit. The people who missed the IPO and buy in the open market after that wave, they paid a higher price. 6 months later, the lockup period expires. That is the legal window that prevented early employees and investors from selling their shares. When that window opens, a large amount of new selling hits a stock that already has very little tradable supply. That price comes under pressure from above. The open market buyers are now holding shares while the people above them in the chain are selling. Are you following the chain? The IPO price holders are not necessarily the exit, but the open market buyers who bought after the passive wave and before the lockup expiry, they might be. Look at who is positioned where in this chain. Then look at where you are likely to end up. So, where does this leave you right now in April 2026? You cannot see the S1 yet. You do not know the ARPU. You do not know the XAI financials. You do not know what defense revenue looks like. But you will know in May 2026. And here is exactly what to look for when that document drops. When the S1 drops, 4 numbers will tell you most of what you need to know. Number 1, Starlink ARPU, average revenue per user. That number that has never been published. This validates or undermines the entire $600 billion Starlink valuation. If ARPU is holding steady as the subscriber base grows internationally, the revenue story works. If it is falling, the subscriber headline is misleading you about how much money Starlink actually makes per customer. That is the first number to find the moment the S1 is public. Number 2, XAI integrated financials. Revenue, quarterly losses, and any sign of a path to breaking even. You are being asked to assign $258 billion to a business losing more than $3 for every dollar it earns. The S1 will show you if that trajectory is changing or getting worse. Number 3. Defense revenue visibility. SpaceX holds more than $22 billion in cumulative government and defense contracts from NASA, the Department of Defense, and the US Space Force. But a law called ITAR, the International Traffic in Arms Regulations, limits what a public company can say about defense and national security contracts. The S1 will contain redacted sections. Public shareholders will never have full visibility into a significant portion of SpaceX revenue. Look at how much is visible. Look at how much is hidden. Number 4. The capital spending plan. Where does the $75 billion actually go? How much funds Starlink expansion? How much funds XAI's race against OpenAI and Anthropic? And how much funds Starship development? The answer tells you what Musk's actual priorities are with your money. One more thing before we close. SpaceX will have a dual-class share structure. That means Musk retains voting control regardless of what public shareholders vote. You can own SpaceX shares, but you cannot change what SpaceX does. You are a passenger, not a co-pilot. That is not unusual for a co-founder-led company, but it is worth knowing before you decide anything. Here is where we are. Everyone looked at the $1.75 trillion and said, too expensive. But the more useful question is not about the valuation. The more useful question is, at what price will you actually be able to buy? From whom? And who built the path between the founding price and your purchase price? The S1 drops in May 2026. That document will show you for the first time what you are actually being asked to buy. The ARPU, the XAI losses, the defense reductions, the capital plan. Figma showed this pattern 9 months ago. SpaceX is the same mechanism, 40 times the scale. Read the S1 before you decide anything. If you want the S1 breakdown the day it drops, subscribe and turn on notifications. That video is coming in May. And if this one was useful, a like takes 2 seconds. It helps this channel reach more people who need to see this before they make a decision.